Olaplex. It is a science-backed, first-of-its-kind hair restoration product, and I'm buying shares of this beaten-down company. Olaplex is a prestige hair product that women around the world, and men too sometimes, rave about.
I have an Olaplex goodie bag. That's fantastic.
Their products are incredibly trendy on social media with a mountain of very good 5-star reviews. Olaplex, the stock, went public back in 2021 with a valuation of around $15 billion. Today, Olaplex is worth 1/10 of that at just $1.5 billion, down 90% from their first day of trading. But I think the stock presents a really good value right now, and I'll tell you why. So, before we get into that, let's talk about what caused this 90% decline in Olaplex stock. When Olaplex IPO'd, they were seeing net revenue growth of 175% year over year, triple-digit top-line revenue growth. That's quite a bit different than the negative 5% year-over-year revenue growth that they just reported. They hit this peak in 2022 and then just had a massive dip in 2023. So what happened? Well, it all started in early 2022 when the EU banned an ingredient called Liliol, which they believed was linked to infertility. Many people erroneously believed that Liliol was still an ingredient in Olaplex products, which it was not. Olaplex had stopped using Liliol long before the EU's ban. In addition to that, the company's image took an even bigger hit when a lawsuit was filed by 30 women alleging that Olaplex products made their hair more brittle, resulted in hair loss and scalp irritation, and more. However, all claims from the lawsuit were dismissed by the presiding judge or voluntarily dismissed by the plaintiffs themselves. But regardless, Olaplex's brand had already taken a hit. Now, it wasn't just the lawsuit. Olaplex also struggled with inventory issues, where retail stores had overstocked Olaplex products, anticipating greater and greater demand. When that demand was not met, they had an excess inventory of products, which led to a slowdown in sales, continuing past that initial drop. However, Olaplex believes that their sales have bottomed in the first quarter of 2024 and are now on their way towards recovering in terms of growth. They actually expect that they may even have 1% top-line revenue growth this year at the high end. And I believe that this is driven by strong demand for their products. Circana, which is a very reputable market research firm, notes that hair product sales in the prestige market where Olaplex operates increased by 10% in the previous year, with styling and treatments, which Olaplex sells, the fastest growing areas. Additionally, hair products with average prices above $30 grew at 3 times the rate of lower priced items and now account for 25% unit sales for the category. So Olaplex fits perfectly in this high growth area of prestige beauty products. Another good catalyst for the company is that their executive chair of the board just upped his stock position by 91%, buying $400,000 more of stock. Technically $376,000. I like to round up, it sounds nicer. So insider selling is not always a bad thing because sometimes it's for tax reasons, sometimes it's for personal reasons, but insider buying is almost always a good thing. An insider's not going to buy if they don't believe in the company. So it's great that the executive chair of the board of directors is upping his stake in the company by almost double. I love to see that. So let's dig into the financials and find out exactly what's going on here. So Olaplex just reported earnings at the beginning of the month. When I looked at the earnings report, it seemed relatively in line to what they had expected previously, but the stock shot up about 25% and then dropped back down the next day to kind of where it was before. Since then, the stock has continued its rally, but it was a very interesting reaction by the market to their earnings. Some positive things to note on Olaplex's recent earnings were their impressive performance in the specialty retail, which is things like Ulta and Sephora that sell their products. They saw a 22% increase in sales year over year. When we look at the breakdown of Olaplex's sales, we can see that the majority of their sales, at least in 2023, comes from professionals. So this is things like salons. So high-end salons will stock Olaplex products, and when women come in, talking about their hair being brittle, dry, maybe damaged, bleached, and they want to try to repair their hair, these professional hairstylists will use Olaplex repair products on these women, and salons are going to be very sticky. They're not going to start using a different product very easily because when customers come into that salon and they've had an Olaplex treatment in the past, they're going to continue to expect an Olaplex treatment. So salons are not likely to change products. So this is a great avenue of recurring revenue. Second place is direct to consumer, which is really interesting because previously that was their smallest segment and is now their second largest segment. So direct to consumer is typically preferable for consumer discretionary stocks because you get to keep a greater percentage of that margin instead of having to split the profits with a retail location. Finally, the smallest division is specialty retail. Like I said, things like Ulta, Sephora, women going into the store, buying Olaplex products at the store. Additionally, Olaplex is not concentrated in the United States. They actually had more sales internationally than they did in the United States in 2023. So they are diversified into multiple different countries. The other cool thing about Olaplex is that their products work on all different types of hair. So whether you have straight hair, curly hair, wavy hair, thick hair, thin hair, Olaplex products are designed to work on every single type of hair. That's that science-driven aspect that they talk about. So I think that's also helped fuel their international sales because different countries of the world, different ethnicities, different hairstyles, it's going to work for all of them. As far as their brand popularity, like I mentioned earlier, Olaplex is extremely popular and in demand, especially on social media. It's reported that Olaplex had 4 of the 5 best-selling prestige hair products year to date in 2024. So clearly a market leader in prestige hair care. And I believe that as the economy recovers in the US and globally, beauty products are going to be one of the first things that money starts flowing into. In my mind, beauty products like makeup and hair care, they're technically classified as a consumer discretionary product, which means that it's not technically a need, not something that consumers will continue buying in a recession, but I believe it behaves a lot more like a staple, something that is resilient, that customers will continue to buy in recessions. I think the problem is that in a recessionary environment, women are going to buy cheaper hair care products. That's going to be one of the things they cut back on. But when they begin to have a bit more spending money, when the economy improves, they're going to opt for the better hair care solutions that are going to be good for their hair in the long term. A lot of women feel very self-conscious having dry, damaged hair, and products like Olaplex are not just a cover-up, they're actually a cure for damaged hair. So I think that Olaplex operates in a really strong niche, and it is a niche. I mean, this is a $1.5 billion company. This isn't going to ever be a $100 billion company. This is a niche product. However, they are the leader in this niche by far. Financially, the company actually looks quite solid. So if we look at their income statement, we can see right off the bat really strong gross margins. They make gross profit of $72 million off of sales of $104 million. So we're looking at gross margins around 69 or 70%. So that's incredibly strong. We can see that they only spend about 30% of their revenue on the actual cost of the product. So like I said, prestige hair product, people are willing to pay that premium, leads to some really juicy gross margins. And their operating expenses are nothing too crazy. We see total operating expenses of $56 million, mostly led by that selling, general, and administrative. Pretty much any retail product is going to have a lot of SG&A costs because you really need to sell the product and advertising is not cheap. Olaplex is able to limit their expenses because they outsource the manufacturing of these products, so they don't have to have a very expensive manufacturing facility on site. Very smart move, in my opinion. When we look at the balance sheet, it off the bat looks nice, but then we need to dig into it a little bit because it's not as good as it seems, unfortunately. So the good news first, they have cash and equivalents of $500 million. So they have essentially 1/3 of their market cap in cash. That's great. We love to see that, especially because, and we'll get to this, they are cash flow positive, strongly cash flow positive. When we look at their current ratio, they have current assets of about $650 million, current liabilities of just $71 million. So current ratio, very, very strong. What we see, though, is they do have long-term debt of about $600 million. So when we dig into that, this is Olaplex's 10K that they filed back in February. We can see that the long-term debt that they have is a term loan facility at 9% interest. That's not pretty. 9% interest is not low by any means. However, what's good about this is that this loan does not come due for more than 5 years. So they have 5+ years to pay off this $600 million in debt. And like I said, they have about $500 million in cash right now, and they are cash flow positive. So I'm not worried about that. Another thing to note on their balance sheet is that they do claim that they have $1.7 billion in assets. However, almost $1 billion of these assets are intangible. So those are things like patents, licenses, brands, things that you can't physically touch. They're intangible. And a lot of times what we see with intangibles is that they're often overstated and will need to be written off. So that's something to keep an eye on with the balance sheet. But overall, we see that that debt is mostly long-term debt. Even though it's at a high interest rate, it won't have to be paid off for quite a while, and Olaplex does have a very solid cash position that is growing. Like I said, they are cash flow positive, and their cash increased $42 million in the past year. So I have no reasons to doubt that they're going to be able to pay off that long-term debt when it comes due. They have plenty of time and they have plenty of cash flows. When we look at their revenues, they do seem like they have bottomed, with a recovery expected in the second half of the year. Oftentimes, Olaplex does see stronger sales in the third and fourth quarter as women get a little dolled up for the holidays and as people buy Olaplex products as gifts. When we look at their most recent financial position, we can also see that they are slowly paying down that debt. Their cash balance is increasing and their inventory balance is increasing. So even though the stock is down quite significantly, down 90% since their IPO, they are becoming a stronger and stronger company as time goes on. Now, I'm not going to be an expert to talk about this product. I'm a man. My hair is thinning. I use Hims. I don't use Olaplex. I can't really tell you that this product works, but if you go out onto social media and look at reviews of this product, you can see that people are raving about it. Add to that the fact that the stock is starting at a very low valuation. Olaplex trades at roughly 9 times free cash flows, which is incredibly low, and their PE is still only 33, which sure, that's higher than your average S&P 500 stock, but for a prestige product that is expected to grow, perhaps that's on the lower side. Also, looking at price to sales, we see that they have a market cap of $1.6 billion and annualized sales of about $400 million. So that's a price to sales of around 4, which is also quite low if we expect this company to grow. Again, like I said, they have really strong gross margins too of around 70%, which makes their low price to sales even more impressive. So what we have here is a relatively cheap stock operating in a market that is growing at 10%, with the prestige area of the market growing at 3 times the rate of their lower priced counterparts. We have an insider buying shares, and we have really well diversified revenue streams and a product that women and men sometimes, if you got long hair, love. To me, Olaplex is looking like a good buy right now, but it's very important to always do your own research. This is an incredibly risky stock to invest in. It's a small cap stock and it's a turnaround story. I tend to avoid small cap stocks and I tend to avoid turnaround stories. So the fact that I'm investing in this, I really want to be extra cautious. I'm going to dollar cost average into the stock, and it's going to be a smaller portion of my portfolio. However, I have been looking for opportunities in the small cap space because small cap stocks have just been beaten down so hard lately, and as the economy recovers, I believe small and mid cap stocks, if you find the right ones, can present opportunities. I don't know if Olaplex will be the right one, but I'm willing to bet a little bit on this stock. As always, this is not financial advice, so please do your own research on the company. This is just meant to be my own opinions and to help you out with your own research. If you guys have any questions, please leave them down below. And if you liked this video on Olaplex stock, please hit the like button. It really helps out the almighty YouTube algorithm. And if you're new to the channel, please subscribe. I do stock deep dives like this on a regular basis. Thank you guys so much for watching, and I hope that going forward you have wonderful, strong, rebuilt, healthy hair. Have a great day.